What's going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So tomorrow, I cannot wait to reveal to you my traditional IRA. And I'm going to have that video saved for you guys. And I'm actually going to give you a replica of my portfolio. And I'm going to explain my rationales. It's going to be a long video. Very excited to show you guys that. And, a little bit of dividend growth is not too bad for it. So I have some dividend stocks that have been hiking their dividends, really good growth stocks and dividend stocks. But I want to go over one thing, and I'm hoping M1 Finance adds this very soon. Yes, I think it's time to have a hybrid and a little bit of diversity with the Kurv ETFs and the YieldMax ETFs. So I'm going to choose one over another that focuses on the same stock. I'm going to go over that for you. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these ETFs right now. The first one I want to go over is the YieldMax NFLX Option Income Strategy ETF. It's sitting at 1849. So against the S&P 500, it has not done too well. Kind of expected. Okay. Now Netflix is doing really well as well. So I'm going to jump to that. Netflix has destroyed the S&P 500 recently. And problem is with these synthetic calls and the way things are run by the YieldMax, something goes bad with Netflix, a significant drop, then NFLY has a significant drop. Now, I myself, I'm an income investor, and I'm using the income of the YieldMax ETFs to buy dividend growth stocks. So, price per share wise, it's not too bad. It's holding up. It's 1849, and Netflix is going up, so that's going to help NFLY. I'm going to jump to the dividend history of it. So right now on their website, the distribution rate is 74.02%. So it does not invest directly in Netflix or NFLX. So be aware of that. Looking at its distribution schedule since inception, so 2023 in September, it was 41 cents, October 2023, 50 cents, November 43 cents, December 79 cents, January 79 cents, February 2024, 125, March 72 cents, April 80 cents, May 96 cents, June 62 cents, July 37 cents, August 57 cents, September 2024 51 cents, October 79 cents, November 78 cents, December 86 cents. Then in January 2025 is 56 cents, and then in February 107. So I'm going to compare it to another ETF. I find this very interesting. So the Kurv Yield, NFLP, that one I'm going to be considering buying. The NFLX option income ETF is still, it's not beating the S&P, but the Kurv Yield one is actually right in line with the S&P 500. I find that very interesting. Netflix is up amazing. I mean, it's 78.14% in the past year, just blown up exponentially. I mean, just huge numbers. So I did a quick stock analysis for you. So looking at these four, okay, so what happens if the stock market goes bad? Okay, the YieldMax NFLY gets killed. You have to worry about a reverse split. The Kurv Yield might be a little bit more protected. And then Netflix will, probably recover. I mean, it's done extremely well. I mean, it's pretty much destroyed companies. I don't hear Redbox. I don't hear Blockbuster. I mean, Netflix has done phenomenal. There's no way those companies could recover. The S&P 500 is doing extremely well itself. So again, there's a percentage of growth. That's why when I show you my video tomorrow, I'm a little bit diversified. I have a combination of ETFs and stocks. So look at that. look at, I'm very shocked, okay? And this is why you have to adapt as a dividend investor, a high yield investor, because if your confidence isn't there, if something goes bad, I'm looking at long term. I'm looking at investments, high yield stocks or high yield ETFs that can buy dividend growth stocks. And I'm going to show you some consistency. So with NFLP, its distribution rate is 27.62%. Okay. Now you got to watch that expense ratio. It's 1.15%. So you have to understand, and I reviewed them previously, but the one thing you have, okay, is let's look at the distribution schedule. 2023, 43 cents, 45, 43, 33, 47, 43, 01, 45, 66, 48, 29, 48, 55, 54, 93, 55, 60, 53, 89, 102, 105, and 85 cents. So still, for its price per share, am I a little worried about net asset erosion with them? No. Am I more worried about the net asset value erosion with the YieldMax ETFs? Yes. So one thing is, okay, they seek to provide current income while maintaining the opportunity for exposure for the share price of the common stock of Netflix, subject to a limit of potential investment gains. So the dynamic optimization, the balance between income versus capital appreciation potential in a certain rising market. Also, the lower beta to the underlying stock can be used as a defensive substitute for single stock investments. So, the enhanced income strategy is focused on generating monthly cash flow through diversified multiple sources, including harvesting cover call option premiums, dividends, and interest income. So, safety sometimes is important. I'm going to be adding them. I think I'm going to maybe add this one, okay? But I don't know about the Netflix one because the price per share, and you see the strategy that it's doing, its price per share is doing extremely well. I'm not too worried about the erosion. Like I said, I don't feel like I could be completely long in the YieldMax ETFs. So this is one thing to look at with NFLP. Sometimes quality is better than quantity. So you have to be aware of that. Netflix is doing well. NFLP is doing well. NFLY is doing well. But what if Netflix takes a significant drop? Then you got to worry about NFLY doing a reverse split. NFLP appears to be a little bit safer, but don't quote me on that. This is why you have to be well diversified and you have to be smart and you shouldn't go all in the YieldMax ETFs. I cannot wait for M1 Finance to add NFLP. I will be adding them to my passive income strategy. NFLP will be one of my income ETFs to buy dividend growth stocks and high yield dividend stocks. I'm going to tell you that right now over NFLY. NFLY, look at it. I'm not too excited about it. I'm more excited about NFLP. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I cannot wait to have that video for you tomorrow. Take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice, strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice. You can lose money. You have to be aware, do your due diligence. And again, all my material is free for you, and it's for entertainment purposes only. You don't have to buy things because I buy things either. Take care and have a good one.